Imagine a surfer patiently waiting for the perfect wave. Suddenly, a swell rises above the horizon, building momentum. This, my friends, is a breakout. In the stock market, breakouts are similar. They signal a potential surge in a stock's price, offering savvy traders a chance to ride the wave of momentum. But just like surfing, timing is everything. Identifying breakouts early can mean the difference between catching a big wave and wiping out. By understanding how to spot these potential breakouts, you gain a valuable edge. So, are you ready to become a breakout master? Let's dive in. Picture a stock price trapped within a narrow range, like a racehorse confined to its starting gate. This range is often defined by clear levels of support and resistance. Support acts as a floor, preventing the price from falling further. Resistance acts as a ceiling, holding the price down. A breakout occurs when the stock's price breaks decisively through either the resistance or support level. This surge in buying or selling pressure signals a potential shift in the stock's direction. Breakouts can be bullish, meaning upward, or bearish, meaning downward. A bullish breakout signals a potential price increase. A bearish breakout signals a potential price decrease. To spot breakouts, we turn to the language of charts, technical analysis. Think of charts as treasure maps, revealing hidden clues about a stock's future movements. Technical analysis involves studying historical price data and trading volume to identify patterns and trends. We look for specific chart formations and indicators that suggest a breakout is brewing. Candlestick charts are particularly useful, depicting a stock's open, high, low, and closing prices over a specific time frame. Each candlestick tells a story, hinting at the balance between buyers and sellers. By learning to read these charts effectively, you can begin to anticipate breakouts and position yourself for potential profits. Just as experienced surfers recognize the shape of a promising wave, seasoned traders can spot classic breakout patterns on a chart. One common pattern is the head and shoulders pattern. This pattern resembles its namesake, with the head representing a peak and the shoulders representing lower highs on either side. Another popular pattern is the ascending triangle. This pattern is formed by a horizontal resistance line and an upward-sloping trend line, resembling a triangle pointing upwards. These are just two examples, but many other patterns can signal a potential breakout. By familiarizing yourself with these patterns, you'll be one step closer to mastering the art of breakout trading. Section 5. Indicator Insights. Tools to confirm your breakout suspicions. Technical indicators are like additional tools in your breakout hunting arsenal. These mathematical calculations based on price and volume data can help confirm your breakout suspicions. One commonly used indicator is the Relative Strength Index, or RSI. The RSI measures the speed and magnitude of recent price changes to evaluate overbought or oversold conditions. Another helpful indicator is the Moving Average Convergence Divergence, or MACD. The MACD helps identify changes in momentum by comparing the relationship between two moving averages of a stock's price. Remember, indicators should be used in conjunction with chart patterns and other forms of analysis. They provide additional confirmation, not a standalone trading signal. Section 6. Breakout Bonanza, Real-World Examples of Profitable Patterns. Let's bring the concept of breakouts to life with a real-world example. Suppose you were following Apple Inc. AAPL back in 2004. The stock had been trading in a sideways range for several months, forming a cup and handle pattern. This bullish pattern often precedes a significant upward move. When AAPL broke above the pattern's resistance line, it signaled a potential breakout. Traders who recognized this pattern and bought the stock early could have benefited from the subsequent surge in price. This example highlights the potential rewards of identifying and acting on breakouts. However, remember that not all breakouts lead to profitable trades. Section 7. Risk and Reward. Navigating the breakout landscape with caution. While breakouts offer enticing opportunities, it's crucial to approach them with caution. The allure of quick gains can often overshadow the inherent risks involved. Not all breakouts are created equal, and some can be false signals, leading to potential losses. It's important to differentiate between genuine breakouts and those that are merely traps. A false breakout occurs when a stock's price breaks through a support or resistance level, but quickly reverses course. This can be particularly frustrating for traders who enter positions prematurely. This can happen due to various factors, including news events or general market sentiment. Sudden market shifts can turn a promising breakout into a costly mistake. To mitigate risk, it's essential to establish clear entry and exit points for your trades. Having a well-defined trading plan can help you navigate the uncertainties. This involves setting stop-loss orders to limit potential losses. Stop-loss orders act as a safety net, preventing significant financial damage, and take profit orders to lock in profits when your targets are met. These orders ensure that you capitalize on gains without getting greedy. Remember, successful breakout trading requires a balance of patience, discipline, and a thorough understanding of risk management techniques. Consistent practice and learning from past trades can enhance your skills over time. Section 8. Paper trading power practice makes perfect in breakout trading. Before risking real money, it's wise to practice your breakout trading skills in a risk-free environment. This is where paper trading comes in. Paper trading, or simulated trading, allows you to practice trading with virtual money. It's like a dress rehearsal for the real deal, enabling you to test different strategies and refine your approach without any financial consequences. Numerous online platforms and brokerage accounts offer paper trading features. Use these tools to your advantage, experimenting with different indicators, patterns, and risk management techniques. The more you practice, the more confident and prepared you'll be when it's time to trade with real capital. Section 9. Mastering your emotions, keeping a cool head in the heat of the moment. Trading can be an emotional roller coaster, especially when dealing with breakouts. Fear and greed can cloud judgment, leading to impulsive decisions and costly mistakes. One of the keys to successful trading is mastering your emotions. This means staying disciplined, sticking to your trading plan, and avoiding making rash decisions based on fear or excitement. Remember, the market is driven by both logic and emotion. By understanding your own emotional triggers, you can make more rational and calculated trades. Keep a trading journal, noting your thought process behind each trade, both successful and unsuccessful. This can help you identify patterns in your behavior and improve your decision-making process over time. Section 10. Building your breakout strategy. A personalized approach to success. There's no one-size-fits-all approach to breakout trading. Each trader has unique preferences and strengths. What works for one trader may not work for another. It's essential to recognize your own trading style. That's why it's crucial to develop a personalized strategy that aligns with your risk tolerance, trading style, and financial goals. Tailoring your approach can make all the difference. Start by identifying the types of breakouts you're most comfortable trading. This could be based on your past experiences or comfort level. Some traders prefer high volatility breakouts, which can offer quick gains but come with higher risks, while others favor more gradual, less risky setups. These can provide more stability and consistent returns. Next, determine the time frames you'll focus on. This is a critical step in shaping your strategy. Will you be a day trader, capitalizing on short-term breakouts and making quick decisions throughout the day, or a swing trader, holding positions for several days or weeks? Each approach has its own set of challenges and rewards. Finally, establish clear rules for entry, exit, and risk management. These rules will guide your trading decisions. This will help you stay disciplined and make objective decisions, even in the heat of the moment. Consistency and discipline are key to long-term success. Section 11. Ready, Set, Breakout. Embracing the journey to market mastery. This is where your dedication and passion for trading will truly shine. Mastering the art of breakout trading takes time, dedication, and a willingness to learn from both successes and setbacks. It's a continuous process of growth and adaptation. Embrace the journey and never stop seeking knowledge and refining your skills. Attend seminars, read books, and engage with other traders to expand your understanding. Remember, the stock market is constantly evolving, presenting new challenges and opportunities. Stay informed about market trends and global events that could impact your trades. Stay adaptable, stay curious, and never be afraid to adjust your strategies as needed. Flexibility is key to navigating the ever-changing market landscape. Now that you have a solid foundation in breakout trading, it's time to put your knowledge into practice. Start by paper trading, which allows you to test your strategies without financial risk. Explore different indicators and patterns and understand how they can signal potential breakouts. This will help you make more informed decisions. Develop a risk management plan that gives you confidence. This plan should include setting stop-loss orders and knowing when to take profits. And who knows, with patience, discipline, and a little bit of luck, you might just catch that next big wave in the stock market. Celebrate your successes and learn from your mistakes. Don't forget to like this guide if you found it helpful, and share it with fellow traders who might benefit from these insights. Subscribe to our channel for more insightful trading tips and strategies. Stay tuned for more content that will help you on your trading journey. Happy trading!